Hello, everyone. Happy Monday. Happy last week of August 2025. How is everyone doing? Good morning, Kevin. Good morning, Royal Palms. Good morning, Patrick. Are you back home yet, Patrick? We're still traveling. Good morning, Sterling. Good morning, Stafford. Good to see you, Stafford. Good morning, Jacob. Good morning, Dean. Thank you for putting in the very limited earnings this morning. So, going to be an interesting week. We had market is interpreted as dovish Powell last week on Friday, ripping the face-off rally. So we'll see what's going on with that. That's why I can't get short this market yet. Can look for pullbacks, can't get short it yet. Can't do it now. We start talking about the middle of September. Could be a very different story. Good morning, David. Good morning, Mark. Good morning, OD Green. Why is my clicky finger working? There we go, OD Green. Good morning, John. Good morning, Anissa. Hello, Charles. All right, everybody flowing in. Let me just hit a couple other buttons here. There we go. Come on. Just have to adjust something. Hello, Charles. Back in Minnesota, chilly 50 degrees to start the week. That would be really chilly for me. It was like 89 degrees on the dog walk at 4 a.m. So, all right, where do we sit? What is this? Yeah, I was going to mention this. Another reason I can't get overly bearish. 92% of companies are currently in the option buyback, open buyback window. Not the option buyback window, the open buyback window. 94 by the end of the week. The buyback window closes September 14th, ahead of the kickoff of next season's earnings. We have upward bias. We also have option expiration in September. We have the Fed meeting. We have the contract roll for the futures. There's a lot right around the middle of September. Pay very close attention to that time frame. That's what I'm paying close attention to. So what? Here we go. Let's do some analysis and see. Right today, we don't have much. Building permits came out earlier. Chicago Fed National Activity Index in contraction still. New home sales are coming out at 10 Eastern. Dallas Fed Manufacturing Index at 10:30. What's more important than the number for me is some of the verbiage behind that. Tomorrow, we got durable goods. We got more home price index. We got the Richmond Regional Fed Manufacturing and Services Index. We got the Dallas Services Index. Consumer confidence tomorrow. But again, sort of a quiet day. Barkin speaking. Wednesday, really very quiet day. Besides what's going on Wednesday afternoon, we got NVDA earnings. That is, let me see here. There we go. NVIDIA earnings on Wednesday. So that's going to be key after the close. Now, Thursday, we have the GDP. We have the jobless claims, as always, on Thursday. And we have the PCE relating to GDP. And then Friday, we have the month-over-month July bait reading for PCE. And consumer sentiment numbers, the final numbers for August. So, Wednesday afternoon with NVIDIA earnings, going into GDP prints, going into jobless claims, and then Friday with the PCE numbers. Week is very backloaded, and then remember, next Monday is a holiday in the USA. So we get big things hitting towards the end of the week, and then we get an extra day off. Right now, market's pulling back. Google in the mega cap's the only thing that's up today in the mega cap. So sort of still digesting to start off the new week. The very dovish rally based off Powell from last week. Well, let's just do a refresh on here. Let's do a refresh. Comm services with Google is the only thing that's really positive. Everything else, real estate, everything else is negative. Just pulling back, orderly pullback so far based off the Fed watch. I'm surprised. This only staying at 83%. Only staying at 83%. And by the way, it's just not a cut priced in for October. So there's two cuts priced in. September and December at this point. We're going to have to see how that changes this week, especially with the PCE numbers coming out. Fear and greed, solidly in greed mode still. Almost back over 39 for the market. Again, what other earnings? Nothing today. I mean, I don't know. Sterling put in pin doo. It looks like pin doo doo. I don't know how to say it. Tomorrow we got BMO banks, but really nothing tomorrow. Box after the close, nothing. Kohl's before the open on Wednesday. Abercrombie Fitch, Williams Sonoma, NVIDIA. That's going to be the big one, with the bout that it makes up the S&P. I think it's like 14% of the NASDAQ, over 7% of the S&P. So right there, that's definitely market moving on Wednesday afternoon. Snowflake and CrowdStrike and HP, but they're secondary. It's really going to be NVIDIA. Thursday, Dollar General, Best Buy. And then after the close, we got Marvell Technologies, Dell. And Friday, Alibaba, but nothing. I mean, it's going to be Wednesday and then all the other numbers on Thursday and Friday. So, all right. Now, technically, let's look at this first. Technically, this is a mini potential double top. I'll be pretty shocked if it does trigger. Then remember, last week I said I was looking for pullbacks only, and then we got the massive rally on Friday. By the way, Friday was also a percent beat buy. Hope everyone spotted that. I don't think I discussed it here, but there was a percent beat buy setup that took out the high on the Powell rally right at when his speech dropped, and we took off from there. So Friday's low is very key, virtually the same low as Wednesday. And we also had the little mini double bottom. Now, this does set up a potential double top, and it would, again, if that were to trigger, there might be a real quick short trade, but overall, not much. Because, look, it'd be into the rotation zone, okay, into the weekly rotation zone, still above the key breakout levels, which are back here. The key breakout levels are still back here. Again, don't get caught in the thing of trying to time the exact top. That's why I'm also recommending that people start looking, especially with the VIX being this low. The VIX, I mean, did you see where it dropped down to on Friday? I mean, we're popping up a bit this morning. But Friday, 1421. You know what? And you can structure things with NDX and SPX options. Dirt cheap option premium through expiration in October. And also your long Vega. I'd recommend you're not necessarily long Vega. I'd recommend structuring option positions where you have a long Vega bias. Why? Because if we do get any more significant pullback, you'll want not only the protection from setting up your option play, but you'll also want the volatility component for a potential spike in volatility. Because if the market does, we get some kind of sell-off, you're going to get the spike in volatility. So you don't want to try to neutralize Vega. You want to leave Vega long. And if you don't know what I'm talking about with Vega, just go to like ChatGPT and ask what Vega means for options. It's their volatility component. You want a long component there. Other than that, still looking for pullbacks unless it's double word to trigger. The key thing, if we do get the little bigger pullback and it starts backfilling some of Powell, because here's the deal. You can see it. Here's your 4-hour. Clear path move all the way down here, but I'm paying attention. Right now into this open, I'm paying attention to the 4-hour rotation zone. Really around 64.55 to 64.63 if we break down if we break down a little more. If we start trading back up, I got to go get above 64.75 to really sustain something on a rotation back up and then close above this descending channel. If we continue to pull back over the next couple days, I'm paying attention to my major support zone. So I also can't get overly bearish. My major support zone is between the 50% from the lows on Friday to the highs on Friday. between the 50% and the 62.5, and there's a key breakout level here. By the way, the double I was talking about was in the spiders, not in the futures. It was a triple bottom in the futures. But my major pullback level is 64.30 to 64.13. If we pull back there, that's going to be the critical area I will look for resumptive buy setups. In terms of cycles, we could still see some more downwards pressure for a few more days on the daily, and weekly are still rolling over. But if you look at this, it's just been, we've actually eked out nearly a new high in this whole downward cycle correction. So this is definitely turning into a volatile sideways correction. Hey, Christoph, thank you. Thank you. I hope you are well too. Thank you for tuning in. So I can't get overly bearish yet. I'm going to say yet. And as Sterling put in, you got the buyback windows opening back up. We got some upward pressure still. I'm not saying this market has to rocket to the moon. Would not be surprised, though, to see it take out the most recent highs. We have divergences also. We could be setting out, even if this takes out a new high, we could be setting up for a triple divergence, which in itself is not a sell pattern. But we do have waning momentum on each slight push higher. Look, we're not taking out the highs, prior highs by much. We're barely taking out the highs. We're really losing momentum. By the way, if you can't tune every day, and we do take out these highs over the next few days, my key cluster I'm looking is right around just in front of 65.50, 65.45 is a key harmonic cluster. So, by the way, also the trigger point, and you can't go to the third target on the double. The first target would be about 62.96, so 6,300. I'd be paying attention to the rising 50 also. Should this trigger? Doubt it will, but if it does, that's one of the key areas I'd be looking for a pullback. And then the next target would be 62.63 roughly. The NASDAQ, this is what's interesting also. The NASDAQ came up between the 50 and the 62.5, which is a key rollover zone. What has to happen before I get more bullish on the NASDAQ? We have to get back above 23,681 and hold that for a daily close. All right. We right now are having a pullback channel. And I'm not using Friday's lows in the NASDAQ for the harmonics. I'm using Wednesday's lows. The key area, if we do pull back, I'm really paying attention. You see where the 50% harmonic is? Right at this breakout area that we broke out from on Friday. So 23,342 area if we do have an extended pullback. Where the key line, the sand for the NASDAQ is 62.5, 23,265.75 on a daily closing basis. If that broke down, there's no double. Remember, there's no double in the NASDAQ. We're in this weak channeling formation. And the NASDAQ's gone a whole bunch of nowhere since the end of July. So we're definitely getting a shift. Okay, but would I be aggressively short the NASDAQ not going into NVDA earnings? Which is a crapshoot. Because they can also give guidance. Even though their earnings aren't spectacular or come in line, they can still give forward guidance. How do you see the interest markets yield curve after Friday's Powell speech? I'll get to that in a second, Christoph. We will get, that's a very good question. So on bullish stuff, guess what? NASDAQ's not my first play right now. Unless we start getting, it's not even my second play. It's not even my third play. It's my fourth play. Unless we start getting the close above the 62.5. We get the close above the 62.5, it'll go up in the rankings. Let's get to some other stuff. Dow, looking more to this. Why? We came out, broke to new highs on Friday. You come back here. Look, if we were tracing the Dow, we have the prior triple top. We broke out from the rotation zone. Percent B buy also on Friday. So coming back in the Dow, coming into the daily rotation zone, it's one of my top ones right now. Where I'll be looking. And there's not even any short setup on in sight unless you get out to the major monthly time frame, and then there could be, but we're a long way off from talking about that. So I'm just looking, if the Dow pulls back, very key support is between about 45,200 to 45,300. The Russell, also because, I mean, that 25 basis point that's now getting priced in for Powell, is that's going to save all the zombie Russell 2000 companies. But remember, we did a while ago close above the 62.5. Never invalidated it. We've ticked off the 75. We've also nearly ticked off the 87.5. We have a key cluster up here, and could this keep going? Next harmonic above the 87.5, which is 2381.1. The next harmonic above that is 2344. So another one, if Russell does pull back, I'll still be looking at buy setups in this one too. Unless we lose this prior major breakout area in the daily rotation zone. The VIX, we already briefly looked at. Little thing today. Also remember on Friday I said if the VIX starts dropping, especially below Thursday's lows, got to go with bull mode, and it just took them out. A little elevated, again, because of NVIDIA. There'll be a little more pressure just in the VIX with NVIDIA coming up and some of the other numbers at the end of the week, PCE and GDP. But other than that, we're still remarkably low. 15 handle. The DAX, keeping an eye on this now. We've had this major buying pressure around 24,265. If that breaks, though it could be a quick short back to the 50, but if that holds, there's to the upside, there's very major resistance at 24.5. So it's trapped between a buying pressure and selling pressure zone. So until it gets out either from the breakdown or breakout, not real interested in the middle here. Now, Christoph asked about this. We triggered a double. Did Friday's move invalidate it? No, it did not. It nearly did. It had to close above 112.05. It did not. Or it had to trade through 112.08.5, which it did not. So technically the double is still in play on the note futures, and here's your yields. The yields had to close below 4.242, which they did not. Or they had to trade through 4.228, which they did not. So the double is technically still in play. So we're going to keep an eye on that. It took some pressure on Friday. I'm real curious on this because I think the yields really, especially the 10-year, overreacted on the pullback. If you take a look at the 30-year, yeah, it dropped on Friday, but put this into context. Look at this. Yeah, a little pullback, but I think the 10-year really overreacted. Now, if we take out Friday's low on the 30-year, I will sit up and take notice, and the market's now saying, hey, the 30-year might be pulling back also. But in terms of yields, this is basing. This is still basing, and that's why I'm paying attention to Friday's low on the 30-year for a closing basis. So that's, if you have any other questions, Christoph, I'm still watching for yields. Now, if we invalidate on the 10-year, if we invalidate this, then I'll go back to consolidation, but I will not short yields unless it starts breaking below 4.2. We still have those patterns in play. And that 30-year was really not very bearish in terms of the yield basis. And the 10-year, I think, was an overreaction. That's just my thoughts. And since we didn't invalidate the pattern, that's also why. Now, crude, watching for it to get into a topping area right here this week. We had the little bounce back rally. Still watching for a rollover play here. We had the little percent B buy last week that followed through. If you personally long crude, I'd be moving up a stop very aggressively. It's coming to a very major resistance area now. getting potentially overbought with cycles to the top. We will get to gold. That's next. Ahmad, thank you for tuning in. All right, gold. Remember, on the 4-hour with the non-settlement close, it triggered a percent B for me. And we talked about that last week, and now it's followed through. Will remain in the short term with a long bias unless we take out last Wednesday's low. If we take out last Wednesday's low, it's taking out all the buying pressure from last week. Would I be shorting it? No, because right below that's the 50% harmonic, and then we have a very key support level. Would not be looking for shorts, would just be patient on any longs. Now, right now, the key remaining area that I'm looking for, again, this kind of pullback doesn't bother me. Even a pullback to 33.95, 33.90 doesn't bother me at all. My key target, though, is right around this 34.43 area, 34.44. We have the low from Friday the 8th that we broke out with some downside for momentum, and that's also the 50% harmonic from this little corrective move. So that is my first key target area. And that is a very key target area because within there, if you look over here, you see here what's happened multiple times. It stalled out. Look at the topping candle over here, stalled out here. Key close here, which besides this reversal candle, that was it's stalled out there multiple times. You see this level. Please take note of 34.52, 34.53. And that's still within the 50 and the 62% harmonic rollover zone. So that is very key. That's why my first target is right in front of that at the 50% harmonic. I hope that I got to say, hey, I see Rusty over on Rumble. I got to say hi to Rusty. Thank you for tuning in, Rusty. So does that make sense, Ahmad? Again, let's look at the bigger picture in gold. We're still holding the weekly rotation zone. Gold is also stair-stepping lower in terms of momentum. That's why I'm still bullish long-term. Now, if we close, especially below the weekly rotation zone and back below 32.77, I will shift to neutral mode in the weekly and start watching for more pullback plays, and maybe even unwind some of the long-term position and look for some pullback plays, some bigger pullback plays. You see how this is starting to form what could be a rounded top, which happens with waning momentum. But in the short term, for short-term trades, still got to play the short-term probabilities, especially as daily cycles going up. All right. Sorry for the extended thing, but a lot of people watch gold. I want to get into that. Copper, not much going on. There was that percent B buy from a couple weeks ago. It's just gone sideways. Again, I'm not overly bullish on copper. We could get a little bounce play in there, but I'm not overly bullish just yet. It's just basing sideways, trying to form a temporary bottom. So I would not be shorting copper right now either. Dollar index closing back below the 62.5 on Friday. I'm still now watching for rollover plays back for the dollar to retest these low areas unless it gets above. Remember, 98.20 was the key level. We closed right at that area on Thursday, and then major reversal with Powell on Friday. So we could not take, we briefly broke and made a new low, but again, a little pop here. The reason I can't get also overly bullish, the euro, little pullback here, but the key close, that was the highest close since the breakdown. It actually managed a higher close above here. So again, not a strong pattern like, hey, I got to go really super long the euro, but watching for key pullbacks to see if we hold, especially the 116.60 area. That's why I can't, again, I was looking for the bullish play. We got the little breakout, but we could not get above that first target of 98.20 area, which is also a breakout zone. So that, and then we had the major reversal. That's why use targets. Please use targets to at least raise stops and know where they are, know where your targets are. Spiders. We had the double. This is the double I was talking about on Friday. Played out on the Powell move. Now we do have a potential double top. Also, just like the futures, we have a potential double top in the spiders. All right. What would that look like if that were to trigger again? It's a long way out from triggering. We have a key gap fill in front of that. It would need a close below 632.95. The 50's in the way of it. The weekly rotation zone, just a pullback in those weekly rotation zones. So again, this is not something that's like get super short. I'd still be looking for pullback plays in this one. By the way, there's some key support at 642.50 to 643. The Qs, same thing as the futures, spiking up to 62.5 and in the rollover zone. So the Qs 574.14 on a daily closing basis is what's key for me in order to get more bullish back in the Qs. Support 568.50 is what I'm watching on the pullback. Bitcoin, paying very close attention to this one. Why? It confirmed but did not trigger the double on Friday. Again, slightly lower probability double against the weekly rotation zone, but the weekly rotation zone is flattening out. So I'm real curious where this is going to close today and if it triggers on a daily basis. And the trigger point for that is a close below 111.903.68. All right, thanks, Ahmad. Yeah, I'll get to this. Want to show them the trigger daily, Head and Shoulders, and Cracker Barrel. Remember, oh boy, the rebranding. Why? I'm not. Cracker Barrel needs some help. Cracker Barrel needs some help. You know what? But that's not because it needed to be rebranded. Come on. That's because their actually food quality went downhill. Here is the Cracker Barrel Head and Shoulders Sterling's talking about. Sterling texted me. Was that last Friday or this weekend? Was it this weekend? About this. I did not see this, so shout out to Sterling. Again, if this loses to 200, we could easily see this pulling back. It's still, with their rebrand and everything else, still not cheap for a restaurant, 21.27, not a great dividend yield. Would you could structure some potential pullback plays in this. I'd be real interested, though, if this comes down and retests this major low area. I'd be real interested in looking for, again, some longs here. But that has triggered, and you see there's the weekly pattern. There's the weekly pattern. There is the neckline, and it's closing right at the neckline. So it triggered on the daily, not really officially on the weekly. But it looks like unless it got some major bounce, could. This would not be a stock, though, if you're trying to pick a bottom in something. This would not be a bottom stock I'd be picking right now. Thank you for reminding me, Sterling. When can I watch the film Get Shorty? Well, I can't tell you exactly when you watch it. I'm starting to watch. Well, I got to stay in short-term bull mode. There's still some upside pressures to this market. So that's why I can't get overly short the market. I can't. But I can start structuring hedges. I'm going to keep saying it. Because, again, would I just be liquidating a portfolio right now and, getting net short? No, I would not. Would I be looking to structure hedges, especially going into the next couple weeks? Yeah, I consider it. if things hit key levels, would I be aggressively getting back into key stocks? No. I'm being patient, like Meta. Meta, by the way, was a little percent B buy on Friday. But a lot of these things, especially there's getting to be more pressure on AI. Things like Meta could fill this gap left behind from earnings. Like, would I be rushing into Meta at this point? If not, if you didn't already capture that percent B buy and aggressively move up a stop. If Meta breaks down, watch for the gap fill. Remember, the Nasdaq's starting to underperform. Now, Google, on the other hand, still watching for a pullback play in this. Still watching for a pullback play in this, especially into the daily rotation zone. The only thing that would change me on Google is if we close below Wednesday of last week's low. Google's about, for the Mag 7, the only one I'm really focused on, potential still buy setups. Yeah, thank you. It was Saturday morning. I believe I was doing a Peloton ride then when you texted me. So, see a lot of downside, only limited upside, and that's with good earnings. I don't see a ton of upside, but I can't get overly short yet. There'll be time. Again, that's why I said last week I couldn't be over. I was only looking for pullbacks because, again, one thing, the market's still in rah-rah mode. The market's still in rah-rah mode. Look at the reaction just from what was interpreted as dovish Powell. Is literally, let's try to rapidly buy everything. Would I be still surprised to see the S&P eke out a new high? I'm talking about, remember how I started this. We could be setting up a rolling over, a rounded top also in the S&P, triple divergence. But do I assume crash mode just yet? No. Can't, because there's no key pattern. We are waning momentum, so Spidey sense is going up. That's why, I'll say it again, if you have a large portfolio, look to some hedges. It's putting insurance on. Putting some insurance on. You can always look to about 20% below these recent highs, because even if this rallies up to the slightly new highs, look for like, again, I can't give exact portfolio advice to everybody, but above 6,500, what's 20% below that? Okay. You know, about 1,300 below that, so that's 5,200. Would I structure that for like, hey, we're going to get all the way there? No. But if you're long Vega, as I said, and you get the bigger pullback, I mean, realistically, I'd be structuring something. Personally, I mean, a lot of people go 20%. I'd be structuring something with a key strikes between 5,500 and 5,700 and that's not saying we necessarily get all the way there, but if you started breaking down with hedges and volatility spikes, that's all you need. Yep. Can anything? Yes, we could see things again. We could see things cause a bigger pullback. Could we even say, hey, could we trigger to double? Because that's the name of the headline. Could we trigger to double? Yes, but could I get still overly bearish? No. I'd be still looking for some of these key levels. There could be a quick short in here, but there's too many stopping points. This is why I can't get overly bearish, because on the daily, we have the 50 still in the way, which we haven't reconnected since we broke above it, reconnected on the capitulation bottom, and then we move back up. And on the weekly, we're still well above the rotation zone. Remember, we don't even have a lot of compression in the rotation zone yet. Now, going into the next couple weeks, can we start? Remember, we had a rolling top going into February. Then we got the tariff tantrum. We have a rounded rolling over top where we still eked out a couple of highs. And then we started to get some rollover downside momentum. So, can we catch up over the next couple weeks and really stall out up here? Yeah. Then I'll be more interested on possibly going net short, not just have hedges, possibly going net short. NVIDIA just needs to go into the phone booth and put on the suit. That's why also, if they, let's say they deliver on guidance and the market doesn't like it, and NVIDIA so far, look, it's a sideways correction. Sideways correction. All right, but let's say the CEO comes out and gives strong guidance still. Can we get one more pop in NVIDIA? I'm getting more and more bearish on AI, by the way. It's starting to exhibit topping patterns. So I'm getting more and more looking for rollover plays, but not aggressively, massively short yet. Looking for rollover plays. Also, things are getting less bubblicious. Like, there's your good old Planters Peanuts, Palantir. Couldn't even on this last rebound last week get back to 50% harmonic. We'll still be watching this, especially if it goes into a double bottom. Okay, but things are starting to wane momentum on the Momo stocks. Would I be shorting this yet? No. Yeah, a lot lower in my book, Charles. A lot lower. Are you talking about debit spread or butterflies? You can do targeted butterflies, but again, I'd structure them with positive vega. Okay? So if you're going to do butterflies, I'd focus on some that at least have put components in them, Sterling. And if you're doing debit spreads, yeah, I would not be doing credit spreads up here with low volatility. Do not be putting on credit spreads, even bearish credit spreads. So you can also structure things like 2x1s or 3x2s. Why am I instead of 1x1s? Why? Because I want a little more bang for my buck with potential vega. So 3x2s could be good, where you're selling 2, you're buying 3 and selling 2 lower. So yes, it's still out of pocket, okay, but you have more of a positive vega component. So you get the downside, plus you get the possible bang for your buck from the vega. Does that make sense, Sterling? Also remember the JMPM collar short strike for September 30 expiration is around 65.05. If we, yeah, it is, but again, is that for the September 30th expiration? Is that when the expiration is on that? Or is it prior to that? I thought it was prior to that. I'll have to double check that. You're probably right, though. But, you know, that only holds it for so long because we got a lot of key stuff coming in before then. Lots of key stuff. So, we shall see. Again, all right. We want to, again, you don't want to wait till the last possible moment to try to put insurance on. I'd rather be early than late, because late you're running for the insurance when everybody else is doing the same thing. And remember, insurance, it's why I'm saying I don't want to, there's no pattern to get massively short the market yet, but there is something with waning momentum to put on insurance, especially in this window. And you don't necessarily want to have to use the insurance. All right, with that, I shall talk to. We went long today, but I think this was still a good session. I hope everyone has a wonderful day. Remember, you still have upside bias. We still have more stock buybacks kicking in. Also, when do they stop? I don't know if you put that in, Sterling. When do the buybacks shut down again? Right around, what is it, September 14th? You start having them disappear from them because we're going into the next earnings season. So remember, you can't buy back your company's stock into a certain amount of time before earnings. So we still have potential upward pressure on the market. Does not mean we're rocketing to like 7,000. But could we hit the harmonic around 65.50? Yeah. Could we stall it up here again and just keep make it around the top? Yeah. Let's see how this plays out over the next. It's going to be interesting. It's going to be interesting September in my book, I think. Interesting September. All right. Thank you. 14th, I was right. Thank you. Your week off ended. Back to listening after work. Enjoyed it? Well, you are welcome. I'm glad you had a good week off, Mark. All right. I shall talk to everyone tomorrow. Remember, not much tomorrow. Not much tomorrow in terms of economic calendar. So, and not much Wednesday. We have a little more tomorrow with durable goods, but some stuff tomorrow. But Wednesday afternoon is really going to set the tone for this week. With that, I'll talk to everyone later. Bye for now.